Good evening. This is Ken Long from Tortoise Capital Management, April 2nd, 2011, with a review of the weekend report set. We're back into bullish normal from bullish volatile conditions. On an annual basis, we are at 67, which is the mid-range of neutral, using weekly RSI. On a 10-day basis, we're at 89, slightly overbought. In the market mosaic, the 200-day moving average percent stretch is at 12.19%. That gets us back into the green and very bullish. The slope of the 50-day moving average has improved to 0.35, which gets it out of red and into yellow. So it's, even though it's yellow, it's actually improving. ADX has dropped to 18.7 as recent price gains have started to degrade the power of the bearish move. ATR percentage has fallen back to 1.24% and back in the normal range. So where market condition is bull normal, market's overbought on a short-term basis. The equities have worked their way back after falling in the Japan and Middle East crises. Leading contenders in ETF2 are still precious metals, especially silver, and any kind of commodities, and the energy sector. Rebalancing project happened this week. 331 is now holding DIA, MDY, and IWM, as is 333, the quarterly rebalancing. And 631 is holding SPY in lieu of DIA. In ETF2, we're making 3 purchases this week. RJI is a blended commodities ETF. EWY is South Korea, and IJK, U.S. mid-cap growth. Theoretical model is at 70% exposure, with 7 of the 10 indexes in the world market model are positive for 5 weeks. And the model portfolio will be at 70% based on the 3 purchases on Monday. That's a restatement of the rebalancing program. Market health check. Vertical blue lines are 10, 20, and 30-day look-back periods. You can see how ADX has pulled back down below 20, and plus DI has now increased over minus DI. You can see the bounce off the 10% correction in the bull market, and we're just short of testing the previous swing high at 135. Williams percent R annual is oversold, and on a 10 basis it's overbought, and also overbought on a 10-day basis. You can see price is better than the 10-day moving average, which has just crossed over the 50-day moving average here. Recap of the ETF2 regional report. SPY is doing better than EFA in the global markets, 49 compared to 44. And then among the U.S. sectors, mid caps, small caps, then large caps, followed by technology. The strongest sectors include U.S. mid caps and emerging markets, and the weakest sectors being Japan and the Euro-Asia blend, EFA. World market model, you can see some strength coming back into equities and differentiating itself around the globe. We have in Asia, South Korea, and India. A few short weeks ago, India had been at 0, the lowest ranked database of any we track, and it's fought its way back, all the way back up to 70%. Emerging markets are strong, as is Brazil. Brazil had been lagging SPY and Latin America in general, but it has since rebounded and looking pretty good. Global sectors and U.S. sector spiders, strength is in the energies, followed by materials and industrials. Marginal improvement in financials this week. Among the European countries, only Sweden is rated in the green, and with the balance being white and yellow. Inside the U.S., large caps weak across the board. Mid caps are the best, followed by small caps. $100 by 200 crossover system. Most of the globals are now back on a buy signal, having climbed their way out of the hole that they had fallen into. ETF top 30 from the ETF2 database, and you'll see this predominantly led by precious metals, global energy, global commodities of any type, and U.S. mid-caps. Quick look at the top 30 ETFs by daily dollar volume. ETF liquidity, these are the top 25 or 30 based on daily dollar volume. Those highlighted in green make the best trading candidates intraday. Shifting gears now to a review of ETF2, Smart Steps report. You can see the 10 indexes of the world market model. 3 of them are red, 7 are green. That puts us at 70% invested, 30% cash. Quick look at the top 30 ETFs. All the usual suspects: silver, energy, grains,